Hi all, welcome to Commerce Veda. At the request of few of the students about one question in the hire purchase CMA inter, I'm going to explain you the complete details, how to prepare the answer and how to present in the examination. This is especially hire purchase accounting in a stock and debtors method, and final accounts method. Now, the question with theory, Beta Limited sells its products only on hire purchase, and the high bid price by cost plus 33%. So if cost price is if cost price is 100 rupees, then the profit 33.33 and selling price is 133.33. It means the profit is either one third on cost or one fourth on selling price. So one third on cost or one fourth on selling price is the first thing we should remember. So it means what? The the cash price is at 100 and the selling price is at 133.333 and the profit is basically 25% of selling price. The first point to remember. Then you're required to determine opening result from the hire purchase transactions by drafting necessary accounts under each of the following method. Method 1, debtors method. Method 2, stock and debtors method. Method 3, final accounts method. If we relate, all the three are exactly as we do for branch accounting. Branch accounting, cash price method, branch accounting, loading invoice price method. In the similar lines, this will go. Terminology is different, but almost all the concept is the same. And when we see here, it says stock out on high budget. Opening 2,40,000. It says high purchase price. Whenever the question says high purchase price, see here, opening stock at high purchase price. So your opening stock is a 2,40,000 is at higher purchase price. So we need to identify the cost price. Your profit you need to eliminate. That is higher purchase price 2,40,000. On that 25% is the profit. 50,000 is the profit. And 1,80,000 is the cost price. That should be in your mind. See, whenever there is high purchase, and if it is high purchase price includes profit, which is 33.333% on the cost or 25% on the higher purchase. In this case, the profit limit is 60,000. Similarly, stock in hand at stock. So stock in hand at shop is always in cash price. So it is not at high purchase. Because at the shop means main shop. The stock in hand is always well cash price. Then installments due from customers means what? Sales made and not received. It is like debtors. 18,000 debtors always at high purchase price and they shouldn't pay the high purchase because the sale is already made. The first logic to be remembered before we going to answer the question. Now, as it says, all the 3 points are now the further information. Goods repossessed. Installments not yet matured, 12,000. What they said? Goods repossessed. Goods repossessed. From the installments not yet due. Means what? The sale happened, but the installments is not due in the current year. They'll be due in the next year. So it is to be treated as stock only. Now, sales repossessed, installments not yet due, not at matured is nothing but how much it is? 12,000. Valued at 4,800. The question. It is 12,000 valued at 4.8. It means those goods which are repossessed or actually the actual cost is 12,000 because the installment's not yet due. Whereas the actually the value at 4.8. So there is a loss. The loss here is 7,200. Loss on repossession. Why do you repossess? Because that particular customer didn't pay the EMI. So you need to take back the stock, but the stock is valued only at 4,800, but originally you put at 12,000. So there is a loss of 7,200. That also we should remember. Now, with this information, next what it says, purchases made during the year, purchases made by the company. We didn't know how much sold during the year. And cash collected from customers 4,80,000. So there should be say how much is the sale we should identify. Before going to the question, we also need to do certain other important things. Those are number one, shop stock account we should. In the shop stock account, we need to go to opening stock, which is 30,000 given in the question. The opening stock given is 30,000 and purchases 4,08,000. So that is also comes to the shop stock to purchase 4,08,000 and the closing stock in the stock account is how much closing stock? 42,000. So by closing stock 42,000. It means by balance. Now the difference 4,08,000 plus 30,000 minus 42,000 is actually what you sold to customers. So we can say by sales, which is 3,96,000, but this is sales at cost. Sales at cost. Because shop stock account represents cost. So with this, your 438,000 working note number one is completed. Now this is the sale, but you should know the sale price, goods sent to customers. So as cost of sales, 3,96,000. Profit, we know 1/3 on cost, 1/4 on sales. You have cost, right? So 1/3 on cost, the profit is 1,32,000. And the higher purchase price of this goods sold is 5,28,000. Right. This is high purchase price of goods sold. Sold on higher purchase. So with the small information, what we did, we identified what is the total cost of the good sold and what is the sale value or high purchase price of the goods sold, which is 5,28,000. Now I have the opening stock at shop, purchases at shop, and closing stock at shop, wherein the ultimate fuel is 396, which is at cost. Adding profit, my total current year installments which were sold is 5,28,000. That is, this is the amount of goods sold during the year on hire purchase system. Right? Clear? And you also have the loss or profit on repossession. So few things are done. And second thing, we also have the data on profit included in the opening stock. Opening stock 2,40,000 is given at high purchase price. So what we did, we identified the profit included and cost price. So many things we computed based on the information. So once the information is ready, one more thing we should do is installments due during the current year. Nothing but your actual debtors. So to balance, brought down. What is your debtors balance? 18,000 opening, 18,000 opening, and current year, we should know how much is actually installments due. So what we should do here, 18,000, and then there is something called closing by balance carried down. Closing itself is how much? 30,000. Closing is 30. So installments due, nothing but your memorandum hire purchase debtors. See, hire purchase debtor, every sale is not a debtor current year. Yeah, from the sale, whatever installment due during the year is debtor, the balance will be stock. And next year it will be debtor because it is not a due, not a due. Suppose the EMI goes for 5 years. The first year portion is due. Balance 4-year portion is not at due. So now here, it given by bank. Cash collected is 4,80,000. If I'm not wrong in the question, the cash collected is 4,80,000. So opening debtors, cash collected and closing. If we see, this is 510 and 510. Two installments due during the year is 510 minus 18,000. 4,92,000. This is installments due during the year. It is actual sales of the year, which is due in the year itself, not due in the next year. It is due in the current year. Then we should also know what is my high purchase stock. High purchase stock should be at high purchase price. To balance opening stock 2,40,000 given in the question. If you go back and see opening stock 2,40,000 here, and goods sent we already computed 528. So to goods sent on hire purchase 528, right? And current year installments due, we computed here 4,92,000 and repossessed from installment not yet due. So I'll write repossessed, which is 12,000. Repossessed 12,000 and by balance brought down. Closing stock in the question, it is given 40. There is no closing stock given. So we need to identify the closing stock. So 240 plus 528, 768 minus 492 minus 12,000 is 2,64,000 is hire purchase stock. As we all know, hire purchase stock includes profit, right? So hire purchase stock closing balance 2,64,000 and profit is nothing but on sales 1/4, on cost 1/3. This is hire purchase price. So 1/4 should be the profit. 66,000 should be the profit, and the cost price should be 1,98,000. With this, all the information, what we can now do, the sums in the first method, which is called debtors method. Again, I'm repeating the question. With the question, what we identified the opening stock, which is stock, hire purchase stock. It says stock out on hire purchase, already sold. It is out on hire purchase. It is at which price? Hire purchase price. So I should identify what is my profit element is this. High purchase price, so 240. On cost, one third means on sales, one fourth. So one fourth of 240 is 60. That is the first thing I did. Second thing what I did is, what is my total current year goods sent on hire purchase? For that, what I did is, I prepared my shop stock account. Shop stock is always at cash price because it is at the shop level. So opening stock, purchases, closing stock. This is the sales, means goods sent on hire purchase. I can call it as, this sales I call it as goods sent on hire purchase. But this is the cost price. So I need to add one third to identify my high purchase price of the goods set. That is done. And the third thing I did is goods repossessed, which is from the installments not at a due, not at a due. So 12,000 is the value of the installments, but they're evaluated for 4,800. Hence, 7,200 is the loss on repossession. As I did many things here, and then I moved to my installments due, wherein it says opening balance of my due 80, received 480, closing 30, so that the current year installments due were 4,92,000. So installments due 4,92,000. Then we also computed what is the high purchase stock balance, which is sent on high purchase. What is the balance? Opening balance, goods sent, installments due, repossessed from not at due, and the balance 264. From the balance, we also identify what is the profit. This is the basic information to do high purchase debtors method. Now, if I go into the high purchase debtors method, I should always prepare my higher purchase trading account, and with the information only I should prepare number 1 to higher purchase stock. You should know this is always a high purchase price. 2,40,000. And by a reversal of loading called it as stock reserve, we prepared this 60,000, which is nothing but 1/4 of the purchase price. Then to goods sent on hire purchase. This we computed, which is 5,28,000. So 5,28,000 by goods sent on hire purchase, because reversal of profit. We did the profit. How much it is? The profit is 1,32,000. All the information is already ready for us to just place at the correct place. And then buy goods repossessed, 12,000, and to loss on repossession, 7,200. If you see, the net is the value. 12 minus 7 to 4,000 is the stock value. So either you can post 12 and 7 to, or directly you can say buy goods repossession, net value 4,000. So either net you can post, or you can post the graph on the credit side and mention the loss on the debit side. Both are permissible. It is not that it should follow the same system, right? Ultimately, your stock should be there in your account with the value. And then you receive the money by back. How much money you receive? 4,80,000 from the customers. Where it is? It is there. Cash receipt. Right. So, and buy. Also have closing stock, hire purchase stock. What is hire purchase closing stock? We computed, which is 2,64,000. Should be at. And here we missed one more thing, to hire purchase debtors which is 18,000. Debtors, opening stock, opening debtors. Then to loading stock reserve, stock reserve and closing stock. We completed here 66,000. Stock reserve and closing stock is 66,000. 66,000. And then by hire purchase debtors, closing debtors, somewhere we prepared the debtors 30,000. 30,000. So posted everything. Now we should see profit or loss. 60,000 plus 1,32,000 plus 12,000 plus 4,80,000 plus 2,64,000 plus 30,000. Total is 9,78,000. 9,78,000 minus 240 minus 528 minus 7,200 minus 18,000 and minus 66,000. Answer is 1 to profit 1,18,800. This is to be transferred to general P&L account. So this is the first method. Now we'll understand what are the steps that we should follow. Number one, we always need to prepare hire purchase trading account. It is in HP debtors method. Trading account. For that, we need opening stock, hire purchase price, and loading. And then we need opening debtors and closing debtors. We also need to prepare HP hire purchase shop stock to identify goods sent on hire purchase, identify the cash price and add the profit. And you also need to prepare a hire purchase debtors account to identify installments due, and you also need to prepare installments due account. You also need to prepare installments due account so that you will know what is installments due so that you can post the same in the hire purchase account. You can post the same in the hire purchase account. This is your hire purchase debtors account, hire purchase stock account. So this is nothing installment due, both are same. And you also need to prepare hire purchase stock account to know the loading stock. Once you prepare all these balance things, then you can go here and copy each and every item so that you will get the final answer. This is the very first method of hire purchase debtors account method. So basis of this question is like we should understand what is hire purchase price and what is cash price. Hire purchase price is cash price plus profit. The profit is nothing but loading. So this is the first method which is on hire purchase debtors method. Now we'll be going into the second method which is stock and debtors method, which is the detailed analysis of each and every account. That will start now. So now we are going to stock and debtors method. In the previous method, we prepared only one main account called HP trading account. All other working notes, they are memorandum accounts. But now in this method, we should prepare many accounts. Number one account is shop stock. Number two account is hire purchase stock. Number three account is stock reserve. Number four account is hire purchase adjustment, the main account. And number five, hire purchase debtors, installment due, hire purchase debtors, And number 6, goods repossessed account. And number 7, we can say goods sent on hire purchase account. We should open various accounts. So these are the accounts we should prepare so that we'll get a complete answer. The first account I'm preparing here is shop stock account. As simple as our previous one. 2, balance brought down. I think the opening balance in shop stock is 30,000. And 2, purchases. We prepared purchases 4,08,000. By balance carried down 42,000. And by, we can say, goods sent on hire purchase. Goods sent on hire purchase account 3,96,000. So this is the shop stock account, exactly like the previous one, which is 4,38,000. No change in this account in both the measures. Now the next account is important account is goods sent on hire purchase. From here it comes to this account. So we know, we said buy goods sent on hire purchase here. So to shop stock. To shop stock how much? 3,96,000. However, it is to send to hire purchase stock with profit. So by hire purchase stock, what we did, 3,96,000, we added the profit, which is nothing but 1.333% into 1.3333 is 5,28,000. 5,28,000. And the balance is nothing but to hire purchase adjustment account, which is profit, which nothing but 5,28,000 minus 3,96,000. 1,32,000 is the profit recognized, to be recognized on this. So 5,28,000. So 2 important accounts, shop stock account, goods sent. Then I can go to hire purchase stock account. Hire purchase stock account. To balance 2,40,000. And here it is buy. So to goods sent on hire purchase account 5,28,000, which we already discussed. And by balance, we need to identify. By balance, we should identify, and we have by goods repossessed, all at high purchase price only, and by installments due, high purchase debtors, we don't know which is, we already know, but we should prepare now in this method. I'm knowing here high purchase debtors is nothing but installments due. What is that we need? We should know. Then we'll get balance closing. So to balance brought down debtors 18,000. 18,000 is the opening balance. And to balance, and then by collection by bank 4,80,000. Given by balance carried down, which is closing balance is given 30,000. So two installment due, nothing but had purchased stock, which is 480 plus 30 minus 12, 4,90,000 minus 18, 4,92,000. 4,92,000. 510 and 510. So 4,92,000 and 510. So 4,92,000. Now I posted this. Now my total is 528 plus 240 minus 492 minus 12. 2,64,000 is my. So this is 768. So 4 accounts I prepared one after one. Shop stock 396. And then shop stock I added profit, goods sent on hire purchase. From goods sent on hire purchase I prepared hire purchase stock. From hire purchase stock I prepared hire purchase debtors. Then how many accounts? 1, 2, 3, 4. I finished this, I finished this, I finished this, and I finished it. Now I still have to do 3 accounts. Number 1 is in that goods repossessed. Goods repossessed. Now, when I repossess the goods, what is the value of my repossessed? The value of my repossessed goods is from where we have taken this repossession from hire purchase stock. So, 2 hire purchase stock, 12,000. And the value is given here is by balance. 4,800 is the value given by balance. Hence, the loss is by hire purchase adjustment amount. Loss should go to the adjustment amount. 12,000 is the original value, but closing balance is only 4,800. So the 12,000 original value on the decide closing balance revalued to 4,800. So the loss is credited to hire purchase trading adjustment account. Adjustment, it is a debit. Here it is credited debit. Loss is always debit. So after goods repossess, we should prepare stock reserve account by balance brought down 60,000. How 60,000 came? Opening stock by 4. Opening stock at higher purchase price. And this must be transferred to higher purchase adjustment account for the current year. And the closing, which is on closing stock by higher purchase adjustment account. Closing stock is 2,64,000. So that is 66,000 and should be your balance carried down, which can be opening balance. So this is 126. Now you should do the final account, which is hire purchase adjustment account. In this account, buy stock reserve. From here it comes. Here 2 adjustment, buy stock reserve. And one on one, we should record everything by goods sent on hire purchase. If you go back and see goods sent to hire purchase, there is 2 hire purchase adjustment. Here, by goods sent on hire purchase, 1,32,000. And if you go back and see goods repossessed, by hire purchase adjustment, so here 2 goods repossessed, the loss is 7,200 and 2 stock reserve 66,000. So 132 plus 60 minus 66 and minus 7,200. 132 plus 60 minus 66,000 and minus 7,200. To general P&L 1,18,800. Exactly the same answer which we got in the first method. 1,18,800. So 1,92,000. So this is the second method of doing it. stock and debtors method. If you compare the answer in the second method and if you compare the answer in the first method, which is 1,80,800, both are one and the same. No difference in the answer. The only difference is in the presentation. Here, we prepared single account, trading account, and there we recorded all the transactions with the help of many memorandum accounts. These are all called memorandum stock, memorandum hire debtors, and memorandum shop stock. So all with the help of all the memorandum accounts, we prepared one single account to identify the net profit. Wherein in stock and debtors method, what we did, we opened various accounts, full recording of the transactions, shop stock, goods sent on hire purchase, HP stock, HP debtors, goods repossessed, hire purchase adjustment, the final account, and stock reserve account. So, by opening various accounts, we identified the profit, nothing but your hire purchase adjustment account. It similarly works like your branch adjustment account. And the third method now we should go to is final accounts. So, as we discussed, the last method is hire final. So, finally, the third method is hire purchase final accounts method. The beauty of final accounts method is you record only a cost price. So open hire purchase trading account. It should like our exact final accounts trading account. In this, to balance or to opening stock. Number one, shop stock. 30,000 always at cost price. Number two, hire purchase stock, which is 2,40,000, but 2,40,000 minus 60,000, which is the loading. So we should always record at cost price, which is 1,80,000. And to purchases, 4,08,000. All are at cost. Buy sales, hire purchase sales, we call it as installments due. Sales should be always at selling price. So installments due, we computed at the previous questions as well, which is 4,92,000. So installments due is 4,92,000. In this question, it is easy because you already have the data. But generally, we should compute the installment due by preparing the sale account. And then buy goods repossessed. That's also at original value, 4,800, which is 12,000 minus loss. Or you can post 12,000 here, loss here. Both the bills we get to. And by HP stock closing balance, which is 2,64,000, has price minus 66,000, 1,98,000 cash price, and shop stock. Shop stock is 42,000. We don't consider here debtors because there is a proper final accounts method. So like opening stock, sales, purchases, closing stock, and abnormal loss. This is a goods. Goods, it's a part of closing stock. So 4,900,000 plus 4,800 plus 1,98,000 plus 42,000 is 736,800 minus 30,000 minus 1,80,000 minus 4,08,000. Answer is to general P&L account. To general P&L account, 1,18,800. So ultimate answer won't change whatever the method you prepare. So here we prepared three methods. Number one, hire purchase debtors method. Only one main account. Others, memorandum account. Number two, hire purchase stock and debtors method. All accounts. Important account is hire purchase adjustment. All loading to Korea. And the third one we did is hire purchase final accounts method. Here, a proper trading account only at cost price. So hire purchase stock account always to be prepared at hire purchase price. Stop stock account always to be prepared at cash price. Hire purchase debtors account is nothing but installments due, always at hire purchase price. So we should, and adjustment account is always with the loading amount. So these are all the various things to be understood while preparing this particular hire purchase trading, debtors, and stock and debtors method, because this question is only one question in the textbook which has everything: debtors, shop stock, hire purchase stock, stock reserve, adjustment, right? And also loss on repossession. So this is all about this solution. Hope you practice the solution once or twice using